Hey everyone, welcome back to your Money Life podcast. We're episode 297 of the podcast. Make sure wherever you're listening, you like, subscribe, 5-star rate, and review this pod because we do this every week. We try to give information every week and actually every day. I just did a TikTok where we'll talk about it. It was actually about one of our stories that we'll discuss in the current events. But before we get into all that, the people that are here that listen weekly, we had a bump in listeners. Maybe it's because we're more frequent on social media now. But for our more normal listeners, we go right into the market update. The first thing we try to talk about what's been going on in the stock market. It's actually been kind of a lot of information that we should digest. The last 5 days, we've been up roughly 0.5%. The market hasn't opened yet as I'm recording, which is Thursday morning, but the market hasn't opened yet. And we've seen about a 0.5% increase over the past 5 days. But this past month, ladies and gentlemen, we're almost up 4%. The market has been chugging along. Government shutdown doesn't matter. Earnings, AI, anything, which doesn't matter. The market has been chugging along. The past 6 months, we got up from the doldrums of May when everybody thought the world was ending, and early May, end of April, and we're up almost 30% on the market since that time. Almost 30% increase. So the people that we were saying, buy, this is a great time. This might be one of the better times you'll have in a bit because the market has corrected, because the market has pulled back. Buy, buy, buy. We were right. We were right. Almost 30% increase in the last 6 months. Year to date, the market's given us 15, 14%. So again, we've talked about this long term. It's almost like keep buying long term. If you look 20, 30 years out, there's no negative returns in the market. If you do one day, yeah, there's going to be a 50 coin flip chance. That's why we don't day trade. But if you look out, if you do a 20% correlation, 20% historical view, 30% historical view, you won't see negative returns. That's just a fact. But people just don't want to wait 20, 30 years. They want an immediate solution to their problems and things that they're going through. I understand that, but that's just not how life works. That's really not. It's really not. So that's the market update. Again, it's strong things in the market. They may not last forever. End of the year, we might see correction. But again, we're seeing the government will have to cut rates, will have to print, which will cause more inflation. When inflation occurs, it's not just inflation of price that you pay, it's inflation of everything. It's all assets. That's why when we had inflation, the market was still going incredibly well. It's inflation of all assets. When you print more money in circulation, people buy all things, meaning assets as well. So that's something to note. Let's think of current events. Let's talk about it. The Fed is split on more rate cuts. So the meeting minutes came out. Even though the Federal Reserve was nearly unanimous in deciding the September rate cut, the meeting minutes from that meeting show only around half of market participants expect a reduction this month, while a vast majority expect at least 2/4 point cuts by the end of 2025. So again, there's like what 12 members, different reserve banks, and they're all voting, making the decisions, doing their projections, and half said, "Hey, yeah, we'll reduce," and the other half said, "Oh, we may not do two more cuts this year." Um, and so they're going to have to come to a consensus. But if you think about it, the NASDAQ at its highest levels ever, gold is actually outperforming the NASDAQ over the past 5 years. I saw a chart about that. Gold is at its highest levels. And I think a lot of that is you have a preconceived notion that we are going to cut and print money, and a devaluing of the dollar means where can you get that value somewhere? You can get it in gold, another asset class, right? If the dollar is devalued because we're printing and inflation may not subside as quickly as wanted, where else can you get yield? Gold. Some people are going to gold. A lot of people are going to crypto. Crypto's at its highest levels ever. So again, you're seeing this rush to assets because of the devaluing of the dollar through printing money, which will have to happen, through inflation, which already is happening. So that's why you're seeing this. You're seeing assets go crazy. Let's look at some other stuff. So let's talk a little bit about. So we have the Fed. They're split on that. I'd wanted to talk to this was still in the market update, but a little bit in this as well. So there's a chief investing officer that says there are reasons to be optimistic, but I wouldn't be precise to see more volatility. So he's being cautious. We're seeing blue chip stocks that did lag, but Nvidia helped the 30 stock index restrict losses, rising more than 2% yesterday. Investors are going to monitor the Fed Reserve Chair comments. He's going to be speaking at the Community Bank Conference, as well as speeches from other Fed officials such as Michelle Bowman and Mary Daly. So yeah, you're just having Fed talk right now. That's the biggest sentiment in the market, how companies are doing and what the Fed is saying about how they're going to approach rates going forward. So that's big. And they've kind of signaled that. That's why the Fed split is big news because we're saying, okay, here's the meeting minutes. Some think they're going to, vast majority expect at least two quarter point cuts, but some say they're not so sure that they want to cut rates this next time. But we'll see exactly how that pulls out. I think they do cut, and they continue to cut. I think we see two more cuts this year, right? So high probability that most traders are betting that. In not so great news, the IRS is going to furlough 34,000 workers. The Internal Revenue Service said it will furlough around 34,000 employees. That's a lot. Just under half of its total workforce as the federal government shutdown stretches past the 1 week mark. The agency noticed that many services could be slowed or paused during staffing shortages, and the public facing taxpayer advocate service is already closed. The agency sent a letter to furloughed employees ensuring that they receive back pay once the shutdown is ended, in spite of earlier White House suggestions to the contrary. So, again, we still have the shutdown. We talked about last week, that was the name of the pod. We have a shutdown going on, and they still haven't come to a consensus on the budget, still haven't come to a consensus on funding to continue to go forward and fund this government. So you're going to see workers furloughed. You're going to see workers furloughed. Furloughed is exactly what it sounds like. You may not have heard of it. Just means, hey, you're going to be put on pause from working right now because we can't fund and we can't pay you, but we'll bring you back when things are back to normal. That's got to be the weirdest thing ever. Imagine going to a job every day and it's like, hey, don't come in today because we don't have money, but we'll bring you back when we do and we'll pay you back pay, which doesn't really help the person in the now because they need to pay their bills now, right? Right? I'm just thinking about it from the actual perspective of the 34,000 employees furloughed. They have to pay their bills now. The rent ain't gonna furlough, is it? Kids' diapers ain't gonna furlough, is it? I don't know. So that's crazy stuff, but that's what's happening. You'll probably see a lot more of that going forward. Again, we're in a pretty long shutdown. This is one of the longer ones we've had. I think they said the 2018 one was a couple weeks, if I'm not mistaken. Someone fact checked me, but this one's been going on for a while. And on the other side of things, Disney's saying, forget furloughs, forget inflation. Disney just announced that they're going to raise park prices. The most magical place on earth is getting pricier. Disney announced immediate price hikes for tickets and annual passes at its Walt Disney World and Disneyland theme parks in the US for the first time ever. One day, one park, one day, one park ticket will exceed 200 during peak periods, including the week between Christmas and New Year's. The move follows increased demand for immersive attractions and fresh park competition. So they don't give a crap about furloughs and back pay. They're raising prices. I'm not into the Disney thing. I've never went. I'm not an adult who goes. I think we've talked about this before. I'm not an adult who cares about Disney. I don't like cartoons. They're stupid, to be honest. And so yeah, but okay, I know it's a kid thing, right? But we never went as a kid. I don't know. I'm not into this Mickey Mouse stuff. But if you are, your prices are going to be raised. Last year, Disney's park division brought in roughly 34.2 billion. The entertainment giant also raised the price of its streaming. So they're just saying they're hiking. They're hiking prices to say, all right, we're hiking prices now, ASAP. So you're seeing that from Disney, and that's kind of interesting. In other fee news, Visa, I wanted to read this story because it's interesting. Visa fees impact schools and hospitals. When the U.S. announced it would begin implementing $100,000 fee to process H-1B visas for foreign workers, most eyes turned to the tech sector, which accounted for a majority of those visas. But the impact could just be as acute for sectors like higher education and rural schools and hospitals, per the Department of Homeland Security. Around 17,000 healthcare professionals were approved for H-1B visas in 2024, as well as 24,000 education workers. Oh, wow. So that's interesting enough. Yeah, no one thought about that. So speaking of the instrument administration, I did a story on TikTok, which is probably my most viewed TikTok, over 6,000 views. Again, we're posting there every day, trying to get people to understand a little bit of things on finance and some other economic updates, personal finance updates, things that relate to you. But there was a story per Forbes. We're looking at it now for the YouTubers that the Trump administration is looking at selling federal student loan debt to the private market. This is a report that said that they're considering selling parts of a 1.6 trillion portfolio of student loan debt to the private market, according to a new report, an unprecedented move that would build on its efforts to dismantle the Department of Education and curtail the federal student loan program. Senior officials at the Treasury and Education departments have discussed the proposal with finance industry executives and considering possibly hiring an outside firm or bank to analyze the portfolio. The discussion comes as Trump has gotten rid of some borrower protections, including restriction collections on defaulted student loans that were paused during the COVID-19 pandemic. Private investors likely wouldn't be willing to pay more than the loans are worth since their value is tied to the abilities the private market doesn't have, such as unlimited time to collect loans and immunity from laws. So this is interesting enough. Like again, they could sell these private loans, which again, this is getting a lot of traction and engagement, um, and traction engagement online because it's it's such a unprecedented move, selling part of loans that are federal to the private markets. You can make that decision to go from federal to private, but then they sell the loan to the private markets. You could lose protections. Um, and they're considering it, right? It's being explored how it gets done. If it gets done, a lot of people in the comments of my post were saying this can't be done. I didn't make a promissory note with someone else. It can't be done. I don't know if it can't be done. Trust me, there's things that can be done that probably wouldn't look like it could be done, but get done. So we'll see. We'll see how that goes. And again, we're helping people analyze financial situations, analyze debt payment, analyze retirement plans, all across the world, all across the country, to be honest. So make sure you reach out to someone that's an expert in those areas. Let's pivot and go to the questions of the week. What questions can we potentially have this week? Is a good one. I saw a couple good ones, so I wanted to dive into those and see if you guys got the answers the way I did. I've been on a heater. I've been getting these right. Haven't seen it before. Haven't seen the answers before. I always tell you guys if I do. But the first one is what percent of American families invest in the stock market again? What percent of American families? I know this is over 50%. I think the pandemic and that rush pushed it from under 50 to over 50. But I would say good 54, 56, maybe 60%. Okay. 58%. I last landed on 60%. 58. I'm doing well. And we have a little chart with us as well. You guys won't see it as I've stopped share. But yeah, you see in 2019 to the 2020, it really increased. It was under 50. Wow, I'm really great. It was right about 50%. And then we jumped and 2019 right during the pandemic time. So again, I was living it fully because New Street started literally August 2019. So I fully understand and fully saw this. So eyeballing it was able to give a pretty good prediction on that. Here's another question. I love that question. Previous one. How many countries have banned cryptocurrency? Can you name one? Funny enough, I think Nigeria did. If I'm not mistaken, Nigeria, where my parents and I are from. Nigeria, I've never been, but I am from. My parents are. I think they did. That's the only one I can name. I feel like India said something, but I don't exactly remember what they said. There's 9 countries. Many countries have some laws related to cryptocurrency, but how many countries have total bans on Bitcoin, including owning, trading, and mining? And that's 9 countries. 9 countries making a mistake because we've always been a proponent of cryptocurrency. We've told you to hold a little bit with some of your portfolio. Do they give us the name of the countries? I would like to know. Um, okay, the 9 countries. Let's see. Bitcoin face restriction in 18 countries globally with varying levels of prohibition, from complete bans, payments to restrictions. 9 countries have implemented complete bans: Afghanistan, Algeria, Bangladesh, China, Egypt, Kuwait, Nepal, North Macedonia, and Tunisia. Okay, so Nigeria wasn't on that list, while 9 others maintained partial restrictions on financial institutions or payments. Okay, those 9 countries making a mistake. They've got to open up their minds and their hearts. They've got to open up. They've got to open up, and things will be a lot better for them. Well, folks, That's this week's episode. Make sure you like, subscribe, 5-star rating review. Tap into the TikTok, tap into the Instagram. We're posting daily, maybe twice a day sometimes, to give people an understanding of what we do and how we do it, and some educational content. Make sure you share with us with your family and friends, and we will talk to you next week.